Welcome to OnFrontiers Expert Chat. I'm Gavin Serkin, OnFrontiers Editorial Director. OnFrontiers is all about opening access to expertise within our community of thousands through one-on-one consultations and really open forums like this one today. I'm going to hand over for a very quick introduction to OnFrontiers from the group's co-founder and CEO, Brian Coet, before we head into our main topic. Brian.
Thanks, Gavin. Briefly, for those new to our community, OnFrontiers is an online knowledge-sharing platform headquartered in New York City. In 2014, I joined my co-founder, Anna Kroyer, to invent a better model for peer-to-peer learning in the international business context. Today, many leading consulting firms, investors, and other businesses are using OnFrontiers to access human intelligence in more than 52 markets globally. Last fall, we launched the Expert Chat series to dig deeper into topics bubbling up on OnFrontiers, and we view this forum as an important supplement to the mostly one-on-one learning facilitated between clients and experts over the platform. We have several future expert chats in planning phases, so please do provide us feedback on this segment. Stay tuned for what's next and tell us what you'd like to learn about in future expert chats. Thanks, Gavin.
Okay, great. Thanks, Brian. And Brian will be back after our discussion in about 45 minutes time, so do stick around if you'd like to hear more about the OnFrontiers community and how to get involved. But first, to our main topic. Last quarter, the value of private equity investments in India more than doubled, surging 182% in Q3. Indian exits, or call them what you will, realizations, onward sales, jumped to the highest level since 2009. Over in Beijing, President Xi spelled out his vision last month for China to become the world's technology powerhouse, to rival Silicon Valley and South Korea. Basically, there's a ton of activity going on in Asia right now. And even if Donald Trump thinks the economies over there aren't quite as robust as America's, so how do you get involved? What do you need to know? Our expert panel today comprises three of the most experienced players in navigating private equity across China, India, and the USA. We have with us Vinit Bhatia from Bain & Co., who works with private equity funds and portfolio companies across Asia Pacific. We have Vineet Chadha of Tata Capital Innovations Fund, which specializes in exporting innovation from India into the US. And Xavier of Continental Venture Partners, which exports innovation from the US into China. A very warm welcome, gentlemen. We have some probing questions submitted to us today by all of our participants, but everyone should please feel free to post further questions or observations as we go along using the button at the bottom of your screen. We have some journalists with us today in the interest of channeling the insights discussed here today to a broader audience. The only thing we ask, please, of the media is to cite OnFrontiers Expert Chat when you're quoting so the readers know where to come back to for more information. Experts, welcome again. Let's get some perspective first from each of you. It's a question from one of our participants named Rasarin, and he asks, what has been the best investment so far of your career? And a follow-up question from me, what has been the worst? I want to turn first to Vinit Chadha.
So Gavin, as you mentioned, what we essentially do is make deep tech investments in companies which first roll out their products in India. As they fine-tune their products, then they further scale up and move to the US. So one of my best investments has been in the cancer diagnostic space, which essentially, as you know, cancer is a pain point which is across the world. It's a global market that the company caters to. So their value proposition is that they are able to predict which cancer therapy will work best on a patient. So it's personalized cancer treatment. And unlike gene-based tests, what they do is essentially mimic the human body outside. So instead of the doctor running the chemo on the patient, he tries it on the external lab plate, and the correlation is very, very high. So they rolled it out in India and then now have moved to the US. raised good funds, built a good organization. The team scaled up very well, doing trials in the US and India, which have panned out well. So that's one of my best investments so far. In terms of your follow-up question, my worst investment has been in an ATM manufacturing company. Now, when we made the investment, ironically, in fact, when we made the investment, we timed it just right, because that was the time when the regulatory framework in the ATM industry in India was opening, which was, by the way, not very long back, just 4 years back. Previously, banks could not set up ATMs in the country. You had to obtain a license. It was opened only 4 years back. But now, 4 years down the line, the macroeconomic environment again has changed, because the governments come up with a demonetization initiative. Everything's going digital. So therefore, the overall sentiment around ATMs overall is fairly low. So the tech industry moves at a very, very fast pace. So 4 years in this segment is a fairly long time. So good overall, obviously, for the country and for our other investments, but that specific investment has not done well.
Okay, really fascinating, the cancer treatment innovation there. Vinit, Bhatia, if we have you audible now, question to you.
Well, I work with Bain & Company. We're a consulting company that advises private equity funds, so we don't make investments ourselves. But what I would say is, as I look across the deals that we have supported in the last year, I think there's a couple of themes that have come out pretty strongly. The first is funds that invest with a very strong deal thesis and strong analytical support behind that thesis, are deals that have worked really well, and often, or not often, occasionally they're contrarian. So one example is a deal in China where export, which is not in favor right now, has turned out to be a pretty interesting opportunity. Our client looked at a deal that was focused on higher up the value chain in export with a set of blue chip customers in the United States and Europe, and with a cost position that was 30% lower than American or European competitors. And it's one that has proved to be quite successful because it's very hard for those competitors to get the same cost position as the Chinese provider has. And so I think going in with a very strong view of what do you have to believe to make this deal successful, or for this deal to be successful, and then proving that out can be a very positive way of investing.
Okay, thank you. And Xavier, what about for you? I know you're focused on bringing export and innovation from the US into China, correct?
Right.
What have been some of your success cases?
Okay. One of the most successful deal have been done so far is related to the so-called botanic drug. And in terms of a botanic drug, it's essentially a natural compound derived from a natural plant rather than chemical synthesis. So among all the so far 10,000 IND applications to US FDA, only 2 have been approved, including ours. The other approval is an orphan drug, so not significant in market. So what we do actually is, this is a Taiwan-based company who ran clinical trials in US. And meanwhile, ever since the 12th five-year plan in China, the Chinese central government actually promotes the so-called modernization of traditional Chinese medicine, which is in the same category as the botanic drug in the US FDA settings. Interestingly, we take advantage of the approval track because as Chinese government trying to accelerate the approval process for those type of botanic drug, it first of all need a standard. However, if you use a unmatured product as a standard to approve, and then maybe it turns out that it failed the clinical trial. So as a result, our product actually was chosen as a standard to approve the modern medicines. So this is way actually we bring the mature asset is originally developed in Asian areas, and then proven its efficacies through clinical trial in US, and then export back to China and use the standard to set up the industry standard. So you can see the interplay between different markets and the interplay between technology, capital, and also policy. So this is one of the success deals have been done so far.
Right, it's really fascinating. And just to stay in China, if we can, Xavier, how would you encapsulate the biggest challenges right now for private equity in China? And I'm thinking, particularly if you can think about the area of distressed or turnaround investors, what are the biggest challenges there, and how is that whole area growing?
Right. A distressed asset actually is a big asset class globally. However, this sector is actually still burgeoning in China, simply because virtually there is currently, honestly speaking, there is no real buyout fund that is capable of doing the portfolio management to cope with the distressed asset. So it will be a very huge, large asset class, but still emerging in China.
Okay, so that's one of the big challenges there for doing business in China.
Right, and also my personal view is that actually the gap in the financial industries, if we compare the top professionals in China and also those on Wall Street, actually there's no big difference. However, I think the big difference still in the industry, because China opened store in 1978. So you can see that the first generation of entrepreneur, they still got quite active in their leadership, in their respective startup, now become very large conglomerate. And however, their knowledge and expertise actually cannot cope with the current dynamic market. So the gap actually is still due to the gap of the industry entrepreneurship from US and China. So this actually poses the largest challenge of portfolio management. So this is simply due to the limited talent pool.
Do you see that changing? How do you see that going forward?
Yeah, actually, it's keep on improving. So given the first wave of overseas returnees, nowadays, actually every year there are tens of thousands Chinese students coming from US and Europe back to China. Actually, they are actually helping the talent pool to grow.
Okay, so talent is gradually increasing to the need, but it's not there yet. Vineet, Chadha, tell me about India. What do you recognize challenges there from China in India, and particularly, we're thinking here of the distressed and turnaround kind of investors, but also more broadly for the private equity industry in India.
Yeah. So as I think all of you would know, recently the government of India has promulgated the Insolvency and Bankruptcy Code. So previously the banks were not adequately armed to initiate proceedings. Now, obviously, this is a big leg up as far as banks are concerned. And roughly 10% of the overall book in India is classified as NPA. So just like in China, the size of the market here is huge. However, I'm again drawing a parallel to what Xavier is mentioning. Even in India, my own view is that while the regulatory framework has been set, and thanks to the government for that, but with respect to expertise available, I think there's still a lot to be done, because in the recent round of biddings, which happened by the banks for these assets, the prices that were obtained were fairly low. And it was essentially, in some cases, the same management which was bidding again for those assets. So while this is a challenge as far as the banks are concerned, I think there is certainly a big opportunity for foreign investors, particularly when the regulatory structure has been firmed up, to look at these assets, is what I would feel. Similarly, on the private equity side, now recently there has been a change in the regulatory framework where foreign investors can invest in units of funds registered in India. Previously, that was not the case. So this is a recent opening up which has happened. Similarly, therefore, on the private equity side, secondary investments of LP stakes of Indian domestic LPs is again available. I think secondaries have been happening in India. More overseas transactions have been happening either in funds which are domiciled in the Mauritius or in Singapore. But for funds domiciled in India, previously this was not available. So this is again an opportunity which is available because Indian banks, which are primary LPs in most domestic funds, are certainly wanting to liquidate these assets.
Okay, thank you. So that's the perspective from India. Vinit, Bhatia, bring it together if you can from your perspective across the region. Where do you see the challenges and particularly again with the distressed and turnaround investment area, do you see that as a growing base?
I think the other guys have talked about this, and I agree that it's small today. It is definitely should have a lot of room to grow. If I kind of take a slightly different angle away from the regulatory side, I think the two challenges that the region is facing, particularly in the emerging markets, are one is management alignment. So how do you get what in a distressed situation? How do you get management or new management even to take the necessary courses of action that are frankly things that most management teams in Asia have not had to do? And secondly, how do you find the talent? There are obviously restructuring shops, etc., that you can use, but the reality is once you go one level below that, the teams in Asia just haven't had experience. They're not used to doing taking some of the types of decisions that are required in a distressed situation. I think it's a little different in mature markets in Asia, but certainly in emerging markets, it's not just a matter of regulatory, but it is a matter of just finding and being able to manage through more of the internal constraints.
Mm-hmm. And Vinit, Bhatia, staying with you, do you see an increase nevertheless in distressed and turnaround investing in Asia? Do you see an increase in that area?
Not yet. Not in emerging Asia. Certainly, a number of our clients have talked about the asset class. Frankly, I think there are other asset classes that people are considering more closely. If you're a traditional GP, buyout GP, what we hear are things more around debt, infrastructure, mezzanine, etc. Not so much distressed at this point. And I think that's reflective of the fact that they know it's going to be tough.
Yeah. Okay. So where do you see as the biggest growth area within private equity in Asia?
Well, if we look at what's happening on the fundraising side in Asia, and if you start with the global funds, KKR having raised 9.3 billion, a number of funds that are now out in the market raising north of 5 billion. It's the only way that money can be put to work is a shifting the focus towards larger deals and more controlled deals. And so I think that's clearly one area that the market's going to go to. If you look at what's happened just this year in 2017, we're on track for a record year in Asia in terms of money put to work. And not just that, but in terms of number of $billion+ deals. So I think the market is clearly moving that way, even despite some of the headline news on the macro side, whether it's slowing growth in China, whether it's political uncertainty, etc. So we're seeing a bit of a decoupling from the macro economic story and the private equity market evolution, which is probably a good thing. So I think where a lot of funds are focusing their energy right now is on finding the next set of mid-sized companies that need capital or expertise to grow and are either willing to cede control or take significant stakes to help them jump from mid-size to large size.
Okay, thank you. And Vinit, Chadha, bring this back to India. Do you see the same opportunity there with mid-sized companies, or what do you see as the big opportunity for foreign investors in India right now? You know, in the context, as Vinit Bhatia was saying, the macro story we've all been hearing about is the slowing growth in India from what it was. You know, still one of the fastest growing major emerging economies out there, but still slowing down from what it was. Are you feeling that at all, or do you see the macro getting separated from the real opportunities there?
So certainly there is some bit of slowing down that goes without saying, right? But very frankly, I think what foreign investors like is transparency and weeding out corruption. And the government is, focused like anything on weeding out corruption in country. So the initiatives that you see being launched by this government include a demonetization, implementation of GST, implementation of reform around real estate reform bills. So it goes, on and on. There is the payment platform which has been launched. So host of initiatives around weeding out corruption. So I think weeding out corruption has had some impact on the growth as well, right? It's more like a cultural aspect. So in the short term, it certainly has had an impact, but in the long term, this is something which will be beneficial to all of us. And I think this is what foreign investors certainly value. The other big piece around India and this government is it is open to suggestions, it is open to corrections. We as venture capital, private equity industry experts have also been called, we have not solicited, but we have been called by the government to give our views, and they have incorporated it in so many things. Similarly, around GST, the government is open. So the government is actively taking steps to ensure that growth is revived. And this is across the board. If you were to talk of financial inclusion, which is the payment stack, if you were to talk of infrastructure, even today there is a news of opening up airports in India. So if you were to talk of the cleanliness drive, if you were to talk of education, startups, by the way, is a big initiative by the government. Never before have startups been funded in the country the way they have been now. So it's across the board: clean tech, LEDs, electric vehicles, solar. So it's a broad play, and the good thing overall is that corruption is being weeded out, which you see on the ground now. There are initiatives which the government is taking. The government is open to feedback. I think these are some things which all of us as investors are very positive about.
Okay, and Aditi Fadnis, one of the participants, makes the point that past governments in India have been wary of private equity. I guess from what you're saying, the attitude of the government has changed as being much more pro private equity.
Yeah, so it certainly has. In fact, the previous Minister of Finance, Minister of State for Finance, was himself a private equity investor, right? So he understood the sector and the segment fairly well. There are numerous tax reforms which have been initiated for the private equity sector. So certainly it is pro private equity. The government itself has launched a 10,000 crore fund of fund to help venture capital, raise more money. So it certainly is very, very proactive.
Okay, and beyond words to actual real money. Xavier, the same kind of question to you, if you will. How would you characterize the opportunity, the real big opportunity for foreign investors in China? And I'm thinking particularly, we've been talking about Prime Minister Modi in India. In China, of course, we had President Xi imprinting his influence and legacy with his political doctrine, socialism with Chinese characteristics now written into the constitution. What do you see as the impact of this very powerful presidential persona on private equity over there?
Right. Actually, overall, government is promoting the sector of private equities, and simply because the next biggest driver of growth is from the private sectors, and among the private sectors, the biggest chance actually come from the emerging technologies. For example, the advanced manufacturing, the TMT, and also healthcare. And meanwhile, the Chinese companies actually are evolving. Previously, only focused on the Chinese market and rely on the domestic consumptions. Nowadays, there are more and more examples of Chinese company exporting their expertise and know-how and even innovation to other markets. For example, one of the Chinese mobile makers, it only actually produce mobile phones and sell it in Africa. And actually, it dominates the African market with over 30% market share. And last year, the total revenue reached 12 billion, or equivalently 2 billion US dollar, with a net profit over 150 million US dollar. And interestingly, the founder of that company actually have a next stage of a move to set up a factory in India, and not only to expand into the Indian market, but also for the top executives, actually Chinese in terms of cultures and also willingness, not like Indian executive to come to Africa. So they train the top executive in India and have them on board in Africa. And in the third stage, since the Southeast Asia, like in Indonesia, is a comparable market to Africa and India. So they will then expand into Indonesia. So this is actually one of the typical examples that the Chinese entrepreneurs actually are evolving themselves towards a larger market. I think for especially the institutional investors could have a stake in the Chinese companies and meanwhile bring in their strategic values to help to expand the overseas market.
Xavier, staying on you, how do you see valuations in China with this increase in interest that we've been talking about? Do you see a danger of companies or assets being overpriced?
Yes, actually, even globally, the asset value is not that low currently. So especially in China, due to the capital flow control and also due to the oversupply of the cash. So already the valuation of asset are somehow overpriced. However, if we look at the other side, which is the capital market, the Asia market actually have the highest liquidity among all the major markets. So you actually, you have to benchmark where you invest and where you could exit. So you have to have a system design before you do the investment.
Okay, so staying on flows of money and capital between countries, Vineet, Chadha, I want to take it back to you to look at how the nature of cross-continental deals for India has changed in the past few years. And then Vinit, Bhatia, I want to get your perspective on this as well. Mr. Chadha.
So certainly, as you said, even when we started the webinar, there is good flow of deals between India and the US. And in fact, if one were to look at the final pool of LP capital into the Indian companies, a significant pool of LP capital, particularly on the venture side, does come in from the US. And venture, as you know, within the overall private equity VC landscape is forming now a significant chunk of capital, right? But as we discussed earlier on, there is a reverse flow of products and product companies also, which is happening now. So out of the 7 investments that we have in our current fund, which are all deep tech across sectors, it includes digital, manufacturing, and of course, it includes the health clean tech also. 4 of our companies have naturally grown and essentially moved to the US. When I say that, they have clients in the US. So I would feel it's a flow of capital primarily from obviously US to India. India still is fairly low on availability of capital. However, the ideas that you get in India, the products that you get in India are improving. Therefore, what is you are able to do is essentially invest into Indian companies at a fairly decent value, and then essentially try and scale them up and move them to the US. So the flow, I think, is fairly good. What is also useful is when you grow these companies to get expertise of developed economies. And because the market there obviously is much more developed around products also, and build them up such that they are ready for a potential global M&A.
Okay. And Vinit, Bhatia, how do you feel the nature of cross-continental deals has changed over the past few years?
Well, let me just add to what Vineet said. I'll take maybe the China angle for a moment. We aren't seeing a slowdown at all. In fact, we're seeing an acceleration of cross-border deals, both in China and Southeast Asia. In China, what's interesting is, since the government put a bit of a clampdown on the capital flows outbound for corporates, it's actually created a bit of a not a vacuum, but an opportunity for private equity funds with Chinese private equity funds with offshore funds to go and do more cross-border deals. And in fact, 2016, we saw a huge acceleration in cross-border deals, up from 17 billion in 2015 to 48 billion in 2016. And what was really interesting, what I think is more interesting, is what drove that was the number of billion-dollar plus deals. So we're seeing a huge surge in not just capital flows, but the types of deals. Are doing very large deals cross-border. And in 2017, our data isn't complete yet, but we see that trend continuing.
Okay, and where do you see some of those big deals? I'm thinking really beyond China and India. Where do you see the value creation opportunities in the wider region of, say, Southeast Asia, Central Asia, for example? I know, for example, we've got people from Sri Lanka among the participants, Mongolia. There's a wide audience out there. Which countries are you particularly interested in?
Well, let me take that in 2 parts. I think the value creation opportunities are frankly everywhere. So I'm not sure it matters by geography. I think the nature of how you tap those opportunities and realize them will vary. And I'm not going to go country by country, but if you put it on a spectrum from lesser developed to more developed, I'd say if you're on a lesser developed scale or on the side of the scale, it really is putting things in, the basic things in, like strong governance, financial reporting, etc. But then, importantly, really working with the founder, the owner, if that's the investment partnership, and to help him or her focus on the 2 or 3 things that are really going to matter and move the needle for the business, instead of the hundreds of things that they often try to do. That's number 1. Number 2 is really helping to focus them on building their management capability. Very often in founder-led businesses, one level below founder is frankly pretty weak. It's often a bunch of relatives or people who don't have necessarily the professional skills to do that role. And so how do you take the founder, especially as a business scales, and help him or her build a team below them that can really help them go from founder level to professional level? I think those are some of the challenges that are particularly important in some of the more emerging markets.
Okay, and I want to ask you about also the context of we have Donald Trump in Asia right now. How has what's been the impact of changing trade relations or the threat of the change in trade relations between North America and Asia on the opportunities that you see in the region? Where are the opportunities and where are the dangers in this context?
So first of all, we haven't seen a huge impact yet from that. He's still in his first year. That being said, I think there's two areas where we're particularly, where people are starting to ask questions. The first is obviously on anything related to export. So if there are tariffs put onto products coming into the United States, what does that mean? What does it do to the economics? That's the negative side, so downside risk assessment. The upside is we're starting to see early inquiries or early discussions on more interest in higher end machinery, robotics, etc. Because the sad, well, not sad, I shouldn't say sad. The reality is that companies that are going to reshore into the United States or want to set up shop in the United States are going to find ways to do that with minimal amount of labor. And so that means there's going to be opportunities for higher end machinery and robotics and things like that. And so I think that's an interesting play if you take a view that this potential trend of increased tariffs or trade barriers is going to run through an investment cycle.
Xavier, let's pick up on that theme that Vinit has just been talking about technology and machinery. How do you view technology in particular over there in China? What excites you, and which sectors are your favorites?
Yeah, my favorite actually is in healthcare sectors. Due to several reasons. One is that the healthcare is an anti-cycle business, and it's now actually in the right time to invest. Ever since the beginning of last year, the Chinese FDA, which is a counterpart of US FDA, undergo a very fundamental reform to accelerate the novel drug approval process. Before that, there are over 5,000 INDs put on the file, not being reviewed. And so this is one boost from the regulatory part. And meanwhile, with the blue paper from the 12th and the 13th five-year plan of China, the government project over $1.5 trillion US market of healthcare in China, and the Chinese market is going rapidly to the second largest, and maybe soon in 5 years, grow to be the largest healthcare market in the world. And still, the domestic indigenous innovation cannot sustain the demand to feed the needs of upgrade of the healthcare standard. And so the opportunities for the cross-border transactions is to facilitate the technology transfer in this regard. First of all, from US to China, say those drugs that have already been in the phase 2 or phase 3 in US FDA, actually we could have a green channel in China, and to have the phase 2 and phase 1 got exempted. And by the design of the dual structure, we can use the so-called multi-centric test. That means instead of having a very independent data in China, and the US data and the Chinese data can combine to submit. That means for those type of biotech companies, they burn money, they raise money from investors, and they burn money once, and they got the dual submission at CFDA and FDA. This actually greatly accelerates the commercialization of the innovation process. And reversely, given the large data pool in China, And normally for the clinical trial, the cost in China is about 1/3 to a quarter of that is in US. And the population actually, in a terminology called cohort, that is a group of special patient, is very, very easy to get in China. So this all actually accelerate the process of clinical trial. So as a result, we actually adopt a dual structure. On the offshore part, we have a fund to invest in equities of US companies. On the other hand, we have incubation in China to do the clinical trial. So this really actually bring a great opportunity here.
Okay, one of our participants sums up the opportunity from technology in China, pointing out that some graduates apparently are getting paid $1 million in bonuses. But Vineet, Chadha, I want to take it over to you in India and stay on technology for a moment. To what extent do you think there's a social impact of this? You know, to what extent is all of this technology outmoding workers? And, you know, talking more broadly, what's the social impact of private equity deals that you're seeing in the region?
So specifically with respect to technology, I think currently we haven't seen much of an impact with respect to jobs. For example, Vineet, Bhatia was mentioning about AI, ML, etc. While most of them are in the works, but I think it's a coexistence model currently. So just like you have online, offline in terms of marketplaces, or you have payments also. They currently form a cash, non-cash, form a very non-cash will form a very small portion currently, right? But overall, I think everyone realizes that all of those, which is AI, ML, are getting mature, and people generally are getting ready for what's going to happen in the future. So you see CTOs getting more active. You see upskilling being done in companies also. So all of that is happening. Overall, with respect to private equity, certainly if I were to talk of India, I think roughly around 140 to 150 billion has been invested in India over the last 15 years. And it would roughly constitute around 50% of the foreign direct investments which have happened in India, right? So roughly around 5,000 companies being invested. So it's contributed significantly to the growth of the Indian economy, and specifically with respect to startups, it has been really very huge, because only I think last year roughly 2.5 billion were invested into 800 startups in the country, and there's a whole movement around startups and entrepreneurship which has come purely because of the PE/VC industry in the country. It's only recently that you see some corporate VCs getting active and investing. But yeah, overall, to sum up, I think PE/VC has significantly helped growth and promote entrepreneurship in India. Certainly, I can't talk of. I do see number of participants asking us about Sri Lanka and about other geographies in Southeast Asia. There are some funds, though, if I may mention here, who are actually diversifying out of India into geographies which are close by. So I see some funds being raised, global funds who have presence primarily in India, now diversifying to Southeast Asia, to include Indonesia, to include Malaysia, certainly those geographies. Sri Lanka in particular, which was a question by one of the participants, I would not be aware of, and I will not be able to comment. Also because I look at just this fund and not the Tata Group overall. Yeah.
Okay, it's a good view of where the money is going out to in emerging Asia. Vinit, Bhatia, just to bring it back to you for the last minute here. We talked a lot about money coming in from the US. Where else is the money coming from into private equity in Asia? What about the Europe? What about the Middle East? How significant is growth of investment from these regions and others?
Very significant, I think. So if you talk about flows of capital, certainly, if you know, LPs as a base to fund Asian GPs, the Middle East and Europe are very significant. And if you look at European GPs in Asia, they're doing okay. And so they're putting more money to work in Asia than they have in the past. And I suspect that will continue. I think part of it is a return profile. Part of it is their deal thesis or their capability of taking Asian businesses and bringing them into Europe, where I think the whole manufacturing reshoring thing is probably played itself out, but it's now more around adding some of the phenomenal capabilities, particularly in fintech and other places in Asia, into Europe. So I think that there's the Asian flow, the flow of capital into Asia has become much more robust and diverse, and I think it's going to continue.
Okay. Well, look, we've covered a huge amount of territory there in the space of 45 minutes. I'd love to go on, but it's almost getting on to 11 o'clock for the Hong Kong participants here. So I want to thank our experts, Vinit Bhatia from Bain & Co, Vineet Chadha of Tata Capital Innovations Fund, and Xavier Shi, and to hand it over to Brian to give us a view of OnFrontiers. Brian.
Great, thanks, Gavin. For those, I'll be giving a super brief overview of OnFrontiers. OnFrontiers is a peer-to-peer learning platform for business. Our clients are fast-moving business professionals, investors, corporations, business developers, consultants. We offer two versions of OnFrontiers. One version is, we call it consumer platform. You can swipe your credit card and start engaging with experts right away. And also an enterprise product, which is a richer feature set suitable to larger organizations. Most of our clients come to us because they're struggling with complex questions that can't be answered by Google, and they're seeking specialized expertise. An example could be a private equity case in which you're trying to dig into specific aspects of the target's market and flesh out the business plan. Our platform matches you with the right expert for a learning call. It starts by you detailing aspects of what you'd like to know from the expert, and then we scan thousands of potential matches to identify experts for you. With those you select, you can schedule a time and connect over the platform. The conferences are on our website, although we provide a dial-in for you to connect by phone. After the consultation, we make it easier for you to re-engage with that same expert or to move on to the next question. This is a service that's built for speed, so all of these steps can happen in a day or in as little as a few hours. For those of you who have used expert networks in the past, just a few key ways that we differentiate. One is our international focus, our scalable and convenient pricing model, powerful platform features that allow you to save time, and the way we help our firms build, our clients build their own knowledge network. I'll just mention a few points on each. For markets, we are geography and sector agnostic, although many of the connections that we make are cross-border, and we have a rich community of experts spanning developing, fast-developing frontier and emerging markets. There's no subscription fee or minimum purchase to get started on OnFrontiers. We use a prepaid credit system that allows you to pay for time with experts and ancillary services. Overall, the cost of using OnFrontiers is between 30 and 50% of the cost of using a traditional expert network. We have a rich set of features that help you not only conduct a consultation with an expert, but also pull out the key learnings from that consultation and distill those into your work product. And by asking questions on OnFrontiers, you're actually building your firm's knowledge network. We leverage internal sources of knowledge, and each consultation is shareable with your team and accessible across your firm. So that's it. Very briefly, that's OnFrontiers. If you'd like to learn more about how to use OnFrontiers, what we're doing, and how it applies to your work and your next project, please visit our website and email me to schedule a demo. Thank you very much.